Every day, approximately $10 trillion moves through the global financial system. Not 10 billion, 10 trillion, every single day. Most of that money moves invisibly. Not in armored trucks, not in briefcases, not even in ways that most people would recognize as money moving at all. It moves as electronic signals between banks, as entries in ledgers that most people have never heard of, through systems so complex and so deeply embedded in the infrastructure of global finance that almost nobody outside the industry fully understands how they work. Today I'm going to show you exactly how money actually moves around the world, the systems, the players, the mechanisms, and why understanding this matters far more than most people realize. Let's start with what happens when you make a payment, something as simple as swiping your card at a coffee shop. You tap your card. The transaction feels instant. But in the fraction of a second between your tap and the approval signal, something remarkably complex has occurred. Your card reader contacts the payment processor. The processor contacts your bank. Your bank checks that you have sufficient funds and that the transaction isn't flagged as fraudulent. Your bank sends an authorization back through the processor to the merchant. All of this happens in under 2 seconds. But the money hasn't actually moved yet. Authorization is not settlement. The merchant has a promise that the money will arrive. The actual transfer of funds happens later, usually overnight, through a process called clearing and settlement. Clearing is the process of matching and reconciling all the transactions that occurred during the day. Settlement is the actual transfer of funds between banks. At the end of each business day, banks don't settle every individual transaction separately. They net everything out. If Bank A owes Bank B $50 million from customer transactions, and Bank B owes Bank A $47 million, only $3 million actually moves. The netting dramatically reduces the volume of actual money that needs to transfer. That final settlement in the United States happens through a system called Fedwire, operated by the Federal Reserve. Fedwire processes approximately $4 trillion per day in interbank transfers. It is the backbone of domestic dollar settlement. Now let's talk about what happens when money moves internationally. This is where the system becomes truly extraordinary. There is no single global payment system. There is no world central bank. And yet money moves between countries, between currencies, between financial systems continuously and reliably. How? The answer is correspondent banking. Every major bank in the world maintains accounts at other banks in other countries. These are called correspondent accounts. When a company in Germany wants to pay a supplier in Japan, the German company's bank doesn't wire money directly to Japan. Instead, it instructs its correspondent bank in Japan to credit the supplier's account. The correspondent bank does so, and the German bank's account is debited. Later, the two banks reconcile their accounts. The instructions for these transfers flow through a messaging system called SWIFT, Society for Worldwide Interbank Financial Telecommunication. SWIFT doesn't move money. It moves messages about money. It tells banks what to do, what amounts to transfer, from which accounts to which accounts. The actual movement of funds happens through the correspondent banking relationships. SWIFT connects over 11,000 financial institutions in more than 200 countries. On a typical day, it processes 40 to 50 million messages. It is the nervous system of global finance. Now here is where it gets interesting from a geopolitical perspective. Because SWIFT is so central to international payments, being excluded from it is financially devastating. When the United States and European Union excluded Iran from SWIFT in 2012 and again in 2018, Iran's ability to conduct international trade was severely impaired. When Russia was partially excluded from SWIFT in 2022 following the invasion of Ukraine, it created significant disruption to Russia's international financial transactions. SWIFT exclusion is one of the most powerful financial sanctions tools available to Western governments, and its power comes entirely from the fact that there is no readily available alternative for most countries. Now let's talk about the shadow systems, the parts of global finance that move money outside the conventional banking infrastructure. Hawala is one of the oldest money transfer systems in the world. It predates modern banking by centuries and is still widely used today, particularly for remittances in South Asia, the Middle East, and Africa. Here is how hawala works. A worker in Dubai wants to send money to his family in Pakistan. He gives a hawala broker in Dubai $1,000. The broker calls his counterpart in Pakistan and tells them to pay the worker's family the equivalent amount in Pakistani rupees, minus a small commission. The family receives the money. No actual money crossed a border. The two brokers settle their accounts periodically through other means. The system runs entirely on trust and personal relationships. It has no central record keeping. It leaves almost no paper trail. Hawala is legal in many countries and illegal in others. It is fast, cheap, and accessible to people who don't have bank accounts. It is also used for money laundering and sanctions evasion because of its opacity. Now let's talk about something even more significant in terms of sheer volume: the eurodollar market. The eurodollar market has nothing to do with the euro currency. Eurodollars are US dollars held in banks outside the United States. Estimates of the market's size range from $10 to $20 trillion. It emerged in the 1950s when Soviet-era banks in Europe wanted to hold dollar deposits outside the reach of US regulation. It grew rapidly because businesses doing international trade needed dollars to settle transactions, and holding those dollars in non-US banks offered flexibility and efficiency. The eurodollar market operates almost entirely outside any national regulatory framework, and it is the primary mechanism through which dollar-denominated credit is created and distributed globally. When a bank in London creates a eurodollar loan to a company in Brazil, new dollar credit is created without any involvement of the US Federal Reserve. The Fed doesn't control it. The Bank of England doesn't control it. It exists in a regulatory gap between jurisdictions. The 2008 financial crisis was in large part a dollar funding crisis in the eurodollar market. European banks had borrowed heavily in dollars to fund investments in dollar-denominated assets. When those assets fell in value, the funding dried up. The Federal Reserve had to extend swap lines to foreign central banks, effectively lending them dollars to prevent a global dollar shortage. Now let's talk about the offshore financial system. There are approximately 65 jurisdictions in the world that could be described as offshore financial centers: the Cayman Islands, the British Virgin Islands, Luxembourg, Jersey, Delaware in the United States, Singapore, Hong Kong. These places offer legal structures, low or zero taxes, and varying degrees of secrecy. The amount of wealth held in offshore structures is genuinely unknown because it is designed to be unknown. Estimates from economists who study the system range from $8 trillion to $36 trillion held offshore globally. The range is so wide precisely because the opacity is so complete. Money flows into offshore structures through entirely legal means in most cases. A multinational company establishes subsidiaries in low-tax jurisdictions and structures its intellectual property so that profits accrue there rather than in high-tax countries. A wealthy individual establishes a trust in a jurisdiction with strong secrecy laws and transfers assets to that trust. The cumulative effect on government revenues globally is enormous. Tax authorities in high-income countries estimate they lose hundreds of billions of dollars annually to profit shifting and offshore wealth holding. Now let's talk about the newest layer: stablecoins and crypto infrastructure. Stablecoins are cryptocurrencies designed to maintain a fixed value relative to a traditional currency, usually the US dollar. The largest stablecoins, Tether and USDC, collectively process trillions of dollars in transactions annually. Stablecoins allow money to move on blockchain networks outside the conventional banking system. A company can send dollars from one country to another in minutes, without a correspondent bank, without SWIFT, with transaction fees measured in cents rather than dollars. For legitimate international payments, stablecoins offer genuine efficiency advantages. For sanctions evasion and money laundering, they offer new capabilities that regulators are still struggling to address. Here is what ties all of this together. The global financial system is not one system. It is dozens of overlapping systems, some highly regulated and visible, others deliberately opaque, operating simultaneously. The conventional banking system and SWIFT, the correspondent banking network, the eurodollar market, the offshore wealth management system, the hawala network, the crypto infrastructure. Each of these moves money according to different rules, with different levels of visibility, serving different purposes. The $10 trillion that moves every day flows through all of these systems simultaneously. Most of it moves through regulated channels for legitimate purposes: banks paying each other, companies settling trade, investors rebalancing portfolios. Some of it moves through less visible channels for purposes that range from legitimate tax planning to sanctions evasion to outright criminality. The financial system is the circulatory system of the global economy. Understanding how it actually works, not how it's described in textbooks, but how it operates in all its complexity, changes how you see almost everything about money, power, and geopolitics. The money is always moving. Most people never see it. Thanks for watching.